Hi, Gigi from The Boring Trader. This is week 3 from 14th to 17th of April. Usual warnings and all the things that I've already said. Just go to the first video of my of this series and see all the warnings you have to understand before reading all this stuff. Was Easter Monday, lower volatility, and we can see actually what happens from the equity curve. The first 2 weeks, the first 2 days, there was no volatility and there was no momentum, there was no trend, there was nothing, and this system suffered quite a lot. I mean, it wasn't too bad because we were just below, tiny with below zero plus all the fees, of course. But it was really nothing was happening, and this is the important thing. You always have to consider what the system is built for. If you're testing something related to breakout, you expect that the system is going well when there are breakouts, and you expect that if there is no breakout, no momentum, no trend, the system wouldn't perform this well. And the secret, if you like, is to build up enough resilience in the system to survive bad times. This is usually done mainly through pretty strict risk management, and also with quite a lot of testing. When things like this happen also, it's important to notice that your discretion, so your experience, will play a pretty big role, and we'll probably see a couple of examples later on. Anyway, at the end of the week, we can't complain. It was a pretty good week, especially for the 1-to-1 reward-risk ratio style, which was 7.2R. The 0.5 to 1 was almost half of it, and the half and half was more or less the same. What does it mean? It means also that we had, in these conditions, we had quite a lot of trades. When we have quite a lot of trades, we pay a lot of commissions. And as I anticipated last week, we will see times where the impact of commissions is going to be much higher. Well, this is one of the time, and it's not even the worst, probably. Commissions basically skimmed off 50% of the performance. So basically, half of the time we work for the brokers. Again, we know this because this is part of what we built. We built a basically scalping system based on a breakout. Still, in general terms, the first 3 weeks don't look too bad. We had some ups and downs over the last couple of weeks, but we still managed to make equity high, or at least reproduced equity high. So it's not too bad overall, but you can see that this is based, and if you remember what happened last week as well, this is based on the fact that we need 1 or 2 good days to make the week, and the rest we just need to survive. And this is reproduced here and here and here. Also, it's quite interesting to notice that many many traders come here with this idea that if you don't risk one to get at least three, you're wasting your time, which is a valid point. In the past, especially in the less recent past, there were quite a lot of trending markets, and on trending markets, you are not right most of the time, but when you're right, you're really right, and you continue following the market. I don't really care about the conventional wisdom. If I test something and it tells me that statistically I have a better edge by risking half to go to one, I don't have a problem with that. I'm going to use that. I tested many years, many systems, and I found out that this is the case. The other big thing I would say also is the importance of the break-even. The break-even it's for many people a waste of time. You're either go with your trade because you analyzed it enough and you want to be in, or you don't. The point is that I hate losing, and I know this is a weakness of mine, a weakness of many of us, but I really feel physically almost sick when I lose, and my reaction is try to avoid it. And between trading more and provided there is a statistical edge, of course, and getting out and being stopped out, even if the trade would have been fine, and being in a trade where I don't want to be in anymore and giving back all my profits. This is something I just can't stand. But this is just me, and this is another reason why. There is no good system and bad system. If you tested it enough and it's fine and you have a statistical edge, you really need to take on board the system that applies to your personality. And I will stop here, otherwise I'll start a tirade. Or is it possibly a tirade? I'm not sure. Okay, so as usual, I would like to show a couple of days with a couple of markets, just to illustrate some points. This is euro against the dollar, and this is the 14th of April. And we started here with this level, and the system, according to the rules, will tell you, well, you get in, you didn't get to the half hour, therefore you didn't get into the break-even area, so you're still in. Now the market goes the other way, so this would have been a loss. And if you code, this is what happens. If you look at the market and look at price action and look exactly what is happening there and what is the market telling you, well, you will see that there is obviously a pretty big support level here. And you could see that the market tested twice before being rejected, and then trying again. It didn't quite test it this time, and then shot up. All this happened in an hour. Now, this is a scalping system. I've been in for an hour, and I didn't even reach break even. And I can see that the market is, the bears are pretty weak here. And this is a pretty strong level. Why do I want to stay in? So this is where adding your own discretion and your own experience and your own wisdom, if you like, if you know what you're doing, will save you from a very large number of, well, let's call it mistakes. They're not mistakes, but of losses, definitely. The problem is that the other side of the coin is that at the beginning, especially, you don't know what you're doing, and you think you're better than the system, and you just enter where you shouldn't or get out where you shouldn't. And wisdom comes and experience comes with a lot and lots and lots and lots of time and tests and mistakes. In this case, it was quite easy to see. Um, I know that I would have never stayed in this trade, and so I have to journal it as a break even. Um, Strictly speaking, if we were using an algorithmic kind of thing, this would have been a loss. Then revenge, the bulls are obviously in control. We got in here, and after a little bit of thinking, we would have even reached 2R. Point taken. This was great. But this is another example. You see this level here? This level is based on this. And this is a low of 06, actually 059. And this is a low of 04. So it's 2 points. Now, sometimes you're lucky and sometimes you're unlucky. If your buffer under or over which you put your order is 2 ticks or 1 tick, you would have got in here and you would have had a loss. If your buffer is, I usually use 2.5 or 3 points, is below this, this wouldn't have been a loss. Again, that's important because luck has an important impact on what we do. Sometimes it's just 1 tick from the target, and sometimes it's just 1 tick over the target. And if you look at this, we've been basically lucky again. And this is the reason also why we should always trade, especially on scalping systems, markets that have a bid offer spread which is very, very narrow. Because as you know, on FX, what we're looking here is the bid. So the ask could have been much higher. And if I have, I'm trading a market that has 2, 3, 10, 20 ticks spread, we would have got in here. Or we have to account for it and we would have put the order up here. So in this case, 2 lucky escapes. We paid a bit because we went to half hour, but not quite to 1 hour, and then back to break even. To reiterate this point, this is US dollar against Japanese yen. As you can see, sometimes we are unlucky. Whether you enter below this low here or where this new level here is, and whatever your buffer is, you would have entered here, and you wouldn't have enough time, in my opinion, to judge that there was some sort of support here and get out of break even. So this would have been a loss. And again, if this low was 3 ticks below, you wouldn't have entered this one. Here, this is a much better breakout. Unfortunately, we just went to half hour, and even waiting for the market to go to 1 hour, after this bar here, I would have got out anyway. But still, if the momentum is with you, you can have the possibility of re-entering. This is a new level, and this time you would have had 1 hour. Notice that here I'm using a fixed stop of 10 points, and this is based on the fact that UJ, this market, moves much less than EA, the euro against the Australian dollar we just seen before. So this is a fixed stop that I use for practical reasons, but it's based on the volatility of each market. When the momentum is good, we said you had another win here. And here is where I close the shop, but you would have had another win here, but let's forget about that. Well, I hope this was useful, and usually I tend to confuse everybody. If you are too confused, just give us a call. Bye.